Just imagine this for a second. You open up your crypto app, and all of a sudden you see you've been credited with thousands of Bitcoin. We're talking millions of dollars, and you did absolutely nothing to get it. Now imagine hundreds of other people are getting that same alert, all at the exact same time. Well, that's precisely what happened at the massive South Korean crypto exchange Bithumb. This is the story of their $44 billion blunder and how one tiny mistake almost brought an entire market to its knees.
$44 billion. That is the staggering, almost unbelievable value of the Bitcoin that was just accidentally sent out. Just let that number sink in for a minute. It's an error on a scale that's frankly hard to even wrap your head around.
So how in the world does something like this even happen? Well, this whole massive mess started at Bithumb, one of South Korea's biggest and best-known crypto exchanges. And it all went down during what was supposed to be a totally normal, everyday promotional event. And here's where it gets almost funny, in a terrifying sort of way. The plan was to give users a tiny little promo reward, about 2,000 Korean won, which is basically $1.37. Just a little thank you. Instead, some of these accounts were credited with 2,000 Bitcoin each. Yeah, you heard that right. Not won, Bitcoin. All in all, the exchange accidentally sent out over 620,000 Bitcoin to its customers. The scale of this is just wow. We're not talking about a rounding error here. We're talking about a pretty significant chunk of the total Bitcoin supply being moved because of a glitch. And for the people who got these funds, this wasn't some nice little bonus. Their account balances instantly ballooned to show life-changing, literally generational levels of wealth. You can just imagine what happened next. The second that error went live, all hell broke loose. Customers see millions of dollars magically appear in their accounts, and, what do? They rush to cash out. This kicked off a massive wave of panic selling that just flooded the order books and sent prices on the exchange into a nosedive.
Bithumb had to move, and they had to move fast to stop the bleeding. It was an absolute scramble. Within a frantic 35 minutes, they somehow managed to freeze trading for all 695 accounts that were affected. It was a race against the clock to contain the damage before it completely spiraled out of control.
And pretty incredibly, they actually pulled it off. By the end of the day, Bithumb announced that they'd managed to recover 99.7% of the Bitcoin they'd wrongly sent out. Now, that's a remarkable achievement for sure, but the real story here is the fact that it happened in the first place. So, of course, the first question on everybody's mind was pretty obvious. Was this some kind of sophisticated cyber attack? Had Bithumb been breached by a team of hackers?
That's the first place your mind goes in the crypto world, right? When billions of dollars are suddenly in the wrong place, you immediately think of hackers and security failures. But turns out that's not what happened here at all.
Bithumb was really clear in their official statement about this. They came right out and said, look, this has nothing to do with external hacking or a security breach. They owned it. It was an internal failure, plain and simple.
So if it wasn't a hack, what was it? Well, this is a textbook, almost perfect example of something called operational risk. It's the kind of danger that doesn't come from bad guys on the outside, but from your own internal processes, your people, or your automated systems just failing spectacularly.
Now, this wasn't just a really embarrassing day for one company. The timing here made everything so much worse. This mistake sent shockwaves through a market that was, let's just say, already standing on very shaky ground. To really get the full impact, you have to look at the big picture of the market at that time. Bitcoin was already hovering near a 16-month low. It was down almost 50% from its all-time high. And investor sentiment, it was incredibly fragile, risk-averse. This whole incident was basically like pouring a giant can of gasoline on an already smoldering fire. So the real impact here goes way beyond just a temporary price dip. First, it puts a giant spotlight on the massive and often invisible operational risk that exists in crypto. Second, it gives regulators all the ammo they could ever want to argue for much stricter controls. And third, and this might be the most important one, it seriously shakes investor confidence. At the end of the day, this near disaster really forces the entire crypto industry to look in the mirror and confront some very uncomfortable questions about its own infrastructure and safety nets. It raises these critical questions.
Like, how many of these automated systems are just running wild without any kind of human sanity check? Bithumb reacted fast, sure, but could every other exchange do the same? And maybe the biggest question of all, how protected are you, the everyday user, when an internal system just goes completely haywire? These aren't just theoretical questions anymore. Look, in the end, this story had a relatively clean finish. Bithumb got almost all of the money back. But you really have to think about what could have happened. A similar event in the future might not be contained so quickly, and the market's reaction could be far, far more brutal. And that leaves us with the one big lingering question. The $44 billion, yeah, they were mostly recovered. But the damage that was done to investor confidence, the trust in the actual systems that are supposed to hold this all together, how long is that going to take to repair? That's something the entire industry is going to be grappling with for a very long time.